So, hey, Martin here, and I'm here with Kyle. And Kyle has done quite a bit of banking with us for a number of years. And I thought I'd ask him a couple of questions about specifically a property like this. And we have kind of three different categories of followers on our channel. And one of them is sort of the resort recreational property. Kind of a person which has a different type of lending with that. There's also we've picked up quite a few followers with homestead and agriculture or small-time agriculture things, and then also the off-grid group that's following pretty close to what we're doing here. And we're going to do a little bit of all of that down here. But so Kyle, one of the questions I was going to ask was, with those kind of people, and I know you're used to us dealing with resorts and some residential stuff, and so that's strictly all a commercial lending kind of thing. Right.
Most all of this is commercial lending. There are some semi fixed rate lendings and stuff like that that come through on this through farm credit services or something like that. If it's true ag land, obviously this parcel doesn't really fit into that category. So well, this is more.
Just out of curiosity, what does ag land? What is the description of that?
Ag land usually what they're looking at is, does the ag operation support the debt service for that property? So debt service being your payments. So is it something where you can raise enough cows or grow enough crops to support the land payment? So obviously this one's probably not going to do that that way. So this is more of a recreational or commercial loan.
Hey.
So if it's commercial, then what would they have to expect to be able to?
You're going to expect 20-25% down payment. You're going to expect most likely a variable rate mortgage. That's something that a lot of consumers don't understand because they got a fixed rate house loan and a fixed rate car loan. Variable rates in small quantities are just fine. We've all lived with those over the years, but you're going to most likely deal with a community banker. You're not going to go to a Bank of America or somewhere like that. They don't really understand this quite as good.
That's true.
Because they're going to say, is it a residential lot or, what is it? And you're going to say, well, it's, hobby farm or something like that. They don't necessarily have loan programs for those. So your community banks are going to be your primary source on that stuff.
Yeah. And that's true. If someone was to buy something that already had a house or a residence on it, does that change the picture any at all, or does it make it easier or more difficult, or what? If they're using it as like a primary residence.
If you've got something that's a primary residence, I think the secondary market rule is if more than 30% of the value, and don't quote me exactly on that, but if more than 30 or 40% of the value is in the land, it doesn't really fit on the fixed rate consumer market. But if this had a house on it, land values in this area aren't incredibly high, and there was a $150,000 house on this property, it would honestly finance just like a secondary market. You get a fixed rate loan on it, honestly have some low down payment options and all the options in the world. So a lot of times it is easier and more affordable for folks to buy something with that house already on it, even if the next process is to go do some additional improvements or something like that.
Okay, and would something like that qualify? I know on some of the other videos I have talked about doing kind of construction loans for fixing up and rehabbing and improving properties, and we've done that with resorts and residences both. And would that be something that would maybe qualify for some additional funds as construction money to do improvements?
So, and that's, again, it doesn't really fit in the boundaries of a lot of loan programs, but again, your community banks are generally going to be able to help you with that kind of stuff, and find ways to do a construction financing on it, or if it's property you've already owned for a long time, to do. Right now, home equities are a great option because almost everybody out there has equity in their home if they bought it more than 2 years ago, especially in this area.
Yeah.
So there's lots of different options out there. Talk to your banker on it, and
it's inevitable that I'm going to get this because I talked about this in one of our other videos, and that was when we were buying the treehouse property, and we didn't have really the 20% down or the 25% down that was necessary for that. We were directed into the SBA, which I don't know how that itself would work with something like this. I'm assuming it might, but I don't know for sure. But there was two programs, and it's been long enough ago that I don't remember what those two programs are, what the benefits are of the two different ones.
So I believe you did the 504 program.
It could have been.
Which the 504 program usually is 10 to 15% down equity into the project, and you get kind of creative on that too, because they'll allow some additional assets to be used or different things in there. They'll allow some owner financing. So
would have been the one we used then.
probably use that one. 7A is very similar. The 504, the reason people do that, larger projects, usually $500,000 or more, makes sense on 504. And that gives you a longer term fixed rate, and can get a little better interest rates on those, right, especially in this environment. But you actually get a portion of the loan as fixed rate. 7A is more of a tool for smaller loans. It does work for big loans as well. Can be catered a little more towards the project, and can finance everything from vehicles to land purchases and everything like that. So the
equipment or things like that. Okay.
Yes. So if you're a dump truck operator or something like that, you may get a 7A SBA loan to help you finance that. So lots of different options there available on those. But 7A is definitely a way that a lot of small businesses get started, hence the Small Business Administration.
Right. Well, I would say one more question, I think, and that would be, if you had someone walk into your office today and present a property like this. Now, of course, this is nothing on it. This is raw land. If you had someone walk in today that wanted to present that, what advice would you give to them that would prepare them to come in and make a case to you? Go to another bank?
No, you are be prepared, kind of have some understanding of what you want to do at the property. Obviously, this one, you don't have plans to do something tomorrow. So, right now it'd be to, purchase the property. That's one transaction. If you had building plans and kind of an idea for what you were going to go do, and you wanted to start that, in a month from now, then that's a different loan request. So just to kind of have a true idea of what you want to do. Know that every time you do steps in there, there's a different closing cost in there, but keep your credit scores high, have a financial statement, or fill out the application that the lender gives you, fill it out the best you can, and just provide the income information that they ask for, and it's honestly pretty easy. Put it all in the lender's hands. Every lender has a little bit different stuff that they'll have you fill out. The SBA, you're dealing with a government agency. So whenever you're dealing with a government agency, you just hand in a lot more paper.
Right. Sure.
I saw your eyes, Martin.
Exactly. Hey, our eyes roll with it too. There's more cost when you get into SBA lending, and I attribute some of that is to that cost is for the banker to hit their head up against the wall as they're dealing with the SBA.
Ah, gotcha.
So there really is part of that in some complications with it, but ultimately. Real estate right now in Missouri anyways is 45 to 60 days closing. Nothing's moving very quick. Somehow COVID plays into that, but it's very, very, very doable. Banks are wanting to loan a lot of money right now. We are wide open on lending right now.
Really?
So
I tell you, SBA was a good way for us to get our first big hunk of land.
Yeah,
absolutely.
So-
The SBA
that was the only route we could have taken on that.
So we are looking at SBA as our friend.
Yes.
So even though Martin rolled his eyes,
SBA
really
is the way that many businesses get started.
Right.
You hope as your business grows that you can grow yourself out of that.
Right.
Because, like I said, ultimately most of the time, non-SBA transactions are going to be slightly cheaper.
right?
But hey, sometimes that's what you need to get started.
Yeah.
And it helps you. The reward at the end is much more than the pain in the butt and a little bit extra cost up front.
Yeah.
Right.
And what makes SBA attractive to banks is that when you come in with a proposal, and if they're sort of on board with it, but would really like that extra little edge give them the confidence, the SBA kind of takes some of the risk out of the loan for the bank.
Right.
And so that helps that decision from the bank's part to be a lot easier. I would say, I would guess. Anyway.
Yeah.
Absolutely. And to simplify it, SBA guarantees the bank basically some of our return back. If the loan goes bad, the SBA puts a percentage guarantee out there that they'll cover the loss on that. And that's why banks are willing to go more aggressive when we get an SBA guarantee.
Yes.
Banks have a very, very small margin of error and a very, very small ability to lose much money. If in a community bank, if you had $100 million in loans and you had $1 million of those go bad in a year, it's 1%. That would be a terrible year in banking. I mean, that would be a very, very bad year. And so we have a very, very small margin of error, and that's why stuff like that, SBA guarantees, some bankers will actually tell you some things are just not a bankable request. It may be a great business decision, but it may just need to be funded with capital and not as a bank loan.
Yeah.
Right.
We heard that a lot when we were doing the tree houses. And we kind of found someone that would do that, but it was only with the backing of the SBA. So.
Yeah.
Yes.
Absolutely.
Yes.
So I can't think of anything else. I mean, do you have any other, if I were to walk in today and you didn't know me?
No, just be open, have a conversation, tell them what the full plan is, because ultimately, don't do it in piecemeal. The banker may kind of look at you a little funky initially, but if they have the full picture in mind, they can usually help you find the ways to do it and do it right, so that way it doesn't affect it step 2, step 3 sometimes.
Okay.
So.
Well, I hope that's been good advice and good information. If you find value in the videos that we've been doing, if you could go to the bottom of the screen here of the video and click the subscribe button and the notification bell so you can continue to get those. As we continue through this process, we'll continue to pull together resources that we can help teach a little bit on the whole process of getting it going. Remember the two big questions are, how do you get started? How do you keep it going? Mostly from a financial point of view. And those are the things that we're going to continue to address over and over and over again from different directions. So I appreciate it, Kyle. Thanks a lot for being willing to be dragged down here to the property, down here out into the woods. And we'll see you next time.
Yep. Thanks,
Thank
Kyle.
you.